Looking for ways to reduce your taxes? You'll want to watch this. Although you may already know about property taxes and mortgage interest, you'll learn 6 other ways to save. As a Denver homeowner, you may qualify for tax deductions that can lower your overall tax burden. This can result in a bigger tax refund for you. Now, these incentives are specific to homeowners, which is just another reason to not rent. In this video, we'll discuss the most common homeowner tax incentives that could benefit you this year. Hey, I'm Cher Revolinski from eXp Realty. I'm a realtor serving the Denver area, and I love providing education and helpful tips to make your life a little bit easier. The first item is interest you paid on your mortgage. For homeowners who itemize, the interest paid on your mortgage is usually a pretty hefty tax deduction. This amount depends on when you took out your loan and what interest rate you're paying. Your mortgage company will be sending you a statement disclosing how much interest you paid last year. So you just need to provide this amount to your accountant to write that off. Now, did you know that if you paid discount points, that's also deductible? If you're within the limit to deduct all your mortgage interest, you may also deduct the discount points you paid when the loan closed. You may have paid discount points to lower the mortgage's interest rate, and that's typically about 1% cost of the total mortgage amount. It's important to note that there are other types of fees called like loan origination points, and those don't qualify for a deduction. Instead, those go towards covering the lender's costs in providing loans. So check your closing docs on your home that you purchased, or contact your realtor or your lender, and they should be able to provide a copy for you so you can see that amount. 3, some renovation costs, especially medically necessary improvements. When determining your medical expense deductions, you may include the cost of installing healthcare equipment or other medically required home improvements that benefited you and your household. There are some different deductions applicable depending on if your improvement is permanent, but many modifications that make a home more accessible, like building entrance ramps, wide doorways, railings, and support bars, those can usually be fully deducted. Now, number 4, home office expenses. If you're self-employed and use part of your home regularly and exclusively for business purposes, you may be eligible to deduct home office expenses. The IRS website provides information on how to determine if your space qualifies for a tax deduction, and they also give you worksheets to calculate the amount. You can choose either the simplified method or calculate actual expenses when figuring out the deduction. Number 5, property taxes. You may deduct a maximum of $10,000 or $5,000 if married and filing separately for the combination of property taxes, state and local income taxes, or sales taxes when filing personal income taxes. Relatively speaking, our Colorado property taxes are fairly low in comparison to some other states. If you have a mortgage, your taxes are likely paid through your escrow account. So an easy way to find the number you paid last year is just to look at your mortgage statement. Most will offer a year-end summary with this information. And remember, escrow is typically a combination of home insurance and taxes, so be sure you capture just your tax information. So what you need to know about multifamily residence deductions. People who purchase and operate rental properties can take advantage of various tax deductions that differ from those available for just a primary residence that we just covered. These include asset depreciation. Depreciation is a unique tax benefit of a rental property. According to the IRS, the residential property has a depreciable lifespan of 27.5 years, while non-residential real estate has a depreciable lifespan of 39 years. This allowance is provided to expected wear and tear or obsolescence when owning the property over time. Furthermore, larger purchases like appliances or furniture may also be depreciated by owners over the item's lifespan. So repairs on rental properties are also generally tax deductible. This includes fixing broken banisters, replacing damaged garage doors, but upgrades and improvements like adding something, a new shed or remodeling a bathroom, those aren't considered repairs, but they can be sometimes depreciated for the property. So if you provide tenants with rental credits in exchange for them performing the repairs, that credit can also be deducted as an expense when it's considered income. 8, operating expenses. So expenses related to tenant screening such as background checks, credit reports, reference checks, those are usually tax deductible. Other costs associated with the upkeep of the property like landlord paid utilities may also be eligible for deduction. Also consider lawn care, appliance maintenance, repairs, carpet cleaning, all of those and your HOA dues might be a deduction for you. So check into that. So is it worth your trouble to claim these tax breaks? For homeowners, tax deductions can amount to thousands of dollars. However, it is only worth itemizing if the sum of all of your deductions exceeds the IRS's standard deduction for the 2022 tax year. The standard deduction amounts are as follows: $25,900 for married couples filing jointly, $12,950 for single filers and married individuals filing separately, and $19,400 for heads of households. That sounds like a high number, doesn't it? But it really adds up quickly when you think of the big expenses last year, especially if you just purchased. So if you're thinking of selling soon, the improvements you make to your home can help offset a tax hit when you go to sell. But before going down that remodel path, be sure to watch our video on whether or not you should upgrade before selling. So y'all, I'm not a tax professional, so be sure to consult with one to see if any of these tips apply to your situation. But let me know in the comments if this was helpful. I'm Cher Revolinski, eXp Realty, 303-884-2738. Talk to you soon.